So, in today's episode, I kind of want to talk about a to-do list for newly married taxpayers. Now, it would be lovely if you and your future spouse, talked about these things before you got married, but that's not always the case, and that's all right. That's why you're here listening to this episode today, right? Because we don't want the things that you don't know to turn into a tax problem. So, jumping right in, one of the first things that you need to make sure that you do is update your address with the IRS. Now, in today's economy, it's not too far-fetched that one spouse would be moving into the other's place. But in the case where maybe you all are purchasing a new home and you'll both have a new address, both spouses want to make sure that they update their address with the IRS. This can be done with Form 8822 Change of Address.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 52 of the Tax Relief with Timalyn Bowens podcast. Listen, today is Valentine's Day, and in honor of that, this episode is for the lovers. Okay? So, one recurring thing that I was seeing with newlywed couples is that there were things about their tax situation that they didn't realize were going to change once they got married. So, in today's episode, I kind of want to talk about a to-do list for newly married taxpayers. Now, it would be lovely if you and your future spouse, talked about these things before you got married, but that's not always the case, and that's all right. That's why you're here listening to this episode today, right? Because we don't want the things that you don't know to turn into a tax problem. So, jumping right in, one of the first things that you need to make sure that you do is update your address with the IRS. Now, in today's economy, it's not too far-fetched that one spouse would be moving into the other's place. But in the case where maybe you all are purchasing a new home and you'll both have a new address, both spouses want to make sure that they update their address with the IRS. This can be done with Form 8822 Change of Address. And something that is cool as well is I actually have a video going over this form and how to fill it out on the YouTube channel. So I'll make sure that that's linked with the resources below. But the reason you want to make sure that that address is updated is because in the case that the IRS has to send out any correspondence to you, we want to make sure that you actually receive it, okay? Because yes, the address can be updated when you file your next tax return, but what if you get married in March, right? And you still haven't filed your taxes from the previous year? Well, everything could get all messed up, right? So that's why you would want to take the initiative to go ahead and get your address changed before you need to file your tax return jointly. All right. If we have a situation where the spouse's name changes, so traditionally this would be the bride, right? But I've actually worked with some clients and had classmates where both the bride and groom changed their last names. When that happens and the social security card is updated with the social security office, which is done filling out form SS5, you want to make sure that your tax professional is also aware of that, because since we e-file tax returns, If the name that you give the tax professional does not match what is actually on your social security card, the e-file will be rejected. Okay? So we want to make sure we got that address updated with the IRS. Then we want to make sure that we have updated social security cards from the Social Security office by filling out form SS5 and getting that into them because their system works with the IRS system and it will let them know whether or not the social security number that you're putting in is valid for the tax return. And that's what causes the rejection. All right. Now, the next thing I want to talk about is the filing status. When we have couples get married, especially if it's for the first time, they don't often understand the difference between the filing statuses. So it's pretty straightforward that if you're not married, not with anybody, that you would be single, right? Where things get confusing for taxpayers is with the head of household status. Head of household refers to when a taxpayer provides more than half the care for a dependent. Now, this other dependent could be a parent, it could be a child, right? Typically, when we're looking at children, we're looking at children who are completely disabled if they're adults, or if they are full-time student in college or younger, okay? It does not go for spouses where one spouse works and the other one doesn't. All right. So, in terms of society, we may say that the spouse who's working is head of household, but that's not what it means for tax purposes. When you are married, your filing status options are married filing separately or married filing jointly. Now, typically, married filing jointly is going to have a better benefit for your taxes, but there are things that we have to take into consideration. If you are currently paying back student loans and you have an income driven repayment plan, your adjusted gross income, all right, so that's how much you made on your W-2, your investments, your business, all of that after adjustments is probably going to go up after you're married, which means the payment that you're currently making for your student loans might go up. So that's one reason that taxpayers, after they're married, may decide to file as separate. Another reason is if one of the spouses has a tax debt, because once you file together, you are joint and severally liable for that debt. So, in my professional opinion, if you don't want your refunds taken, one of the things that you need to talk about with your spouse or future spouse is if they have any type of debt that would be offset, that would offset a tax refund. These are things like back taxes with the IRS, back taxes with the state. It could be student loan payments that have gone into default, or it could be child support. Now, if you still wanted to file together and you are okay with the IRS allocating what part of the refund would belong to you, then you could still file an injured spouse form, right? But if you're paying for tax preparation, remember that's going to be an extra form in most cases. That also means the price is going to go up as well. So you kind of have to weigh your opportunity cost there, okay? Now, there is an exception for when one of the spouses can claim head of household, and that is when the two spouses have been separated, so not living in the same house for the last 6 months of the year. In that case, the spouse who has had the children, child or children, more days out of the year, provided more than half the support, they may claim head of household. But the spouse who did not have the children and is not claiming them can't file as single. They have to file as married filing separately. Okay. And that does also have other implications. So I will link another resource down below with an article where I talk about the different filing statuses and what the implications are for those. Now, last but not least in this episode, you want to make sure that you double check your withholding if you were a wage earner. Okay, so you do this by filling out your W-4 again. When you are married filing jointly, you have to take into consideration the income of your spouse because, like I mentioned earlier, your adjusted gross income likely just went up. You also want to make sure that if you just check the box that you're married filing jointly, you have enough being withheld so you all don't end up owing. Because some people go from the 12% tax bracket up to 22, and that's a huge jump. So when you double check your withholding, you want to make sure that you have the additional withholding in line 4C if both of you all are working. And if there are any children involved, you want to make sure that both of you aren't claiming the same children on your W-4. Otherwise, both of you will have less withholding to account for those children, which will result in you being under withheld. Now, especially if you're getting ready for the wedding and everything, you already have a very long list of to-dos. So I don't want to overwhelm you with this part. These are the fundamentals that need to be checked off your list, though, before you actually say I do. If you found this episode helpful, I would strongly encourage you to go ahead and subscribe to the podcast because I share information like this every episode, whether it be preventative care to help you not owe the IRS, or I share things to help you get out of the trouble that you're already in. It would be so humbling to me for you to share this episode because it would help on my personal mission to fill the tax literacy gap one taxpayer at a time. Can't wait to see you next episode. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.